All right, guys, I want to prep you for this week's fundamentals. We'll talk a little bit about what happened last week as well, but this week it's going to be all about GDP. Let's roll the intro. All right, traders, what's up, guys? Welcome to the channel, or welcome back to the channel. It's your boy Cleveland Bishop. Hope you guys are having an awesome Sunday. I want to go over what we saw last week in regards to market structure and what we're looking for this week as well. We had a few trade ideas that I want to discuss, but more importantly, you guys, you might need to make sure you're subscribed because this week is going to be packed. We're going to continue our series regarding Forex strategies. We had amazing response. I really appreciate the feedback. All right. I love feedback. Who doesn't love feedback? I want to make everything better, and better. All right. So guys, look, the next strategy segment is going to be coming out this Wednesday. So make sure you guys are here, subscribe, and you'll be notified. All right. Last week, what we were discussing were the central bankers and all the central bank meetings that we had. We had a slew of central bank meetings regarding the Australia, Japan, US, and Canada all on one day, but we actually didn't get too much of a market reaction, right? If I take a picture here of the Euro USD last week, you guys can see that markets were fairly consolidated, but we did have one trade idea for the Euro USD. I want to roll a quick segment on what we thought the Euro could do based off of it breaking back down into this lower structure and then potentially banging back up into the $30s. Take a quick look at this segment here, which means we might be able to start to catch some price action up here in these highs. But it's a good sign to see that price is available down here in these $15s, even at this time. All right. So potentially, is there a short-term little push up into structure that you might be able to catch? I think so. There might be an opportunity to see this market trade from the $16.30s, potentially up into the $17.30s. All right, so we did get markets to break above that structure there, but now it's all about if the move will sustain and if markets will pull back down into structure. I know a lot of guys want to see this euro in the $15s, in the $14s. I get it, but I was assuming that price discovery would allow for markets to trade back up into the range there, and we did have some bad data on Thursday regarding the US. That's what originally broke us outside of that level. I'm not saying we're going to get bad data to persist and that the US dollar is going to continue to sell because of bad information, but I am going to say we might have some market participants starting to liquidate the US dollar down here in these lows just because of the extra tidbit of volatility that's going to come since markets are down here in this price area. Here's a quick weekly screenshot. You guys can see that markets again right here at this previous low of consolidation. That's the exact same point at which we are right now. And you guys can see markets are having a hard time breaking lower, which would be a 50% retracement level. So I think we might see a little bit more of a stutter step in this price area, meaning that we could see markets push back up into the 17s. 1730s, 1740s was actually where we started to see, where we would think we would see markets maybe start to turn around a bit, just because there seems to be a larger consolidation in that area. We'll see what happens this week, but as of right now, that move still looks pretty good to trade back up into that structure. I don't know if we're going to get markets to sell back off. I'm not saying markets can't trade within this consolidation. It totally can. But outside of the 15 flats this week, I don't think we're going to get it, all right? Which means we should see a little bit more of a likelihood of upside pressure. We'll see what happens. Outside of that, we also had a trade idea for the Gbp Chf. Interestingly enough, the Gbp Chf trade idea was we were hoping to see markets break this 23.6. Here's a quick screenshot. But markets ended up rolling over, as you guys can see, and hanging out in these lows. But we had a contingency play on the Gbp NZD. Here's a quick snippet of the today's markets video that we pushed out in the community where we were mentioning the Gbp NZD as a contingency in case the Gbp Chf didn't work out. Check this out. We will see a break from this consolidated low up into this structure. So the Swiss franc has been gaining a lot of strength over the past few weeks. You guys can see here's three of the crosses that we look at: Euro, Aussie, and the GBP. You guys can see across the Swiss, you guys can see a massive amount of selling happening right now, right? And I was concerned that we will see more buying for that Swiss franc, which would hurt the up move for the Gbp Chf. So I said, hey, look, if we get more buying from that Swiss franc, we might want to play this GBP strength and a little bit of the NZD weakness that's been happening on the Gbp NZD. Boom, economic divergence. That's our play. All right. So that's what we saw. Markets did trade up into those structures. It didn't sustain. We got a little bit of volatility that's happening right now in that range, but I do think we might see a continuation there. We'll keep an eye on that pair as well. Right. So this week, I was mentioning how this week is going to be dominated with gross domestic product, or GDP. We have a GDP release coming out for the US, and we have a GDP release coming out for the Canadian dollar as well. And GDP, man, that's going to be a massive indicator. As you guys know, it's our growth indicator. That's like a third of all fundamental data in regards to growth, retail sales, even consumer growth in terms of job, employment numbers, all those types of things deal with growth overall. And GDP can be a massive indicator as to what's happening in that regard. Now, the US is doing quarterly GDP, so that's going to be what comes out every 3 months, but Canada is doing month over month GDP, right? So GDP forecasts are positive. The US is picking up a massive amount of inflation relative to the entire G10, the entire global economy. The US is picking up steam, right? And so that's putting a lot of people at bay in regards to potentially buying into some of those ancillary markets. We're seeing a lot of much strength come into that US dollar. Obviously that happened back in April, back in May. But again, if we see an uptick in this week's GDP data release, that might put market participants back on the side of that US dollar, not thinking that markets have traded too high too fast. Right now, here's a quick screenshot of our dollar index. Dollar index last week broke all-time highs, right? Real quick, and then it pulled back down in the structure, but still, right, it broke all-time highs. So we may see more strength get pulled in to that US dollar depending on what happens with that number. That's something I'm keeping a lookout for, right? It might already be priced in, so I don't think anything dramatic is going to be happening. But if the expectation is absurdly higher or absurdly lower than what the expected number is, then definitely you're going to see a massive amount of volatility. Now, when it comes into the CAD for sell side, because of the CPI data that was coming out, the expected was 0.4. We ended up getting 0.1. All right, that is monstrously lower than what they were looking to see, right? And so you saw markets trade higher. CAD hit an all-time high for, I think, 2018 in regards to it relative to that US dollar. So you might be able to see a continuation. That CAD has just moved massively in the month of June. It's literally the largest single point move in June that CAD has seen in a very, very long time. I know all year long. All right, we've gained a lot of strength back. So I'm a little bit timid. I am timid in buying any more USD CAD, right? USD CAD is just a parabolic at the moment. You can play it, but I would love to play it in a breakout fashion. And if I have to, waiting on a pullback, you might be waiting a long time, because if CAD keeps underperforming the way it is, it's not going to look too good. Now, we do have GDP coming out for CAD this week as well. We can keep an eye out on that data release there. If we see anything positive, maybe that will give us our first correction, but that's not until later in the week, and we'll be covering that around the time or a day or two before the data actually comes out. So we have to keep an eye out on CAD. So US, again, would like to see a move higher. Even though GDP for the US is forecasted to be positive, would still like to see a move higher on the Euro USD, right? Just based off of the fact that I love the structure that we're in at the moment, and I think markets might be able to push back up into those 17 mids. It looks ridiculous when you're looking at it on the USD CAD when it comes to an upward move. It looks fairly parabolic. Maybe we'll see a pullback down in the structure if that GDP for CAD comes out negative, okay? And so tomorrow I want to be discussing a little bit more of the technicals. We're going to go into the charts for a decent amount of time. And then Wednesday, folks, remember, Wednesday we will have the next part, the second part of that Forex strategy series. So it's going to be important for you guys to stick around. All right. If you guys want to stay up to date on the trades and get inside of the community, click the link in the bio below. It's going to be right there for you. And outside of that, we do have a few more fundamental data coming out this week. Consumer confidence, some things less as serious as the GDP, but the GDP is what we're keeping an eye on. I'll be here tomorrow to discuss a little bit more of the intricacies of what we may see regarding some of the more yellow, orange folder lettered news, but keep an eye on that GDP. All right, guys, look, your profit, always my motive. I'll talk to you guys tomorrow. Peace.